Hello everyone, welcome back. Happy Tuesday. It is November 19th. My name's Levi Woods. This is Drawbridge Finance. My hair's crazy today. Just took off my toque. It is snowing today. Looks like we're having our first snowfall here in the Great White North of Canada. And happy Tuesday, John. I see you're chiming in from the US of A. 12 people online. Thank you so much, everybody, for joining me today. As always, not financial advice. It's just what I'm looking at in the market in general. Rock says hello. I'm glad to see some familiar faces. Just a reminder to everybody, if you're not on my mailing list already, very easy to do. I don't send a lot of emails. I'm not like super aggressive there, but if you go over to drawbridgefinance.ca, so this is my website, but you can just scroll down to the very bottom of the website, and you can join the mailing list if you wish. It's completely free. I am rolling out a very cool thing right now, which is I am doing one-on-one just conversations, just like a super simple. So if you have questions, it doesn't matter what type of investor you are. You're just like, hey, I have questions. I want to know like more about me. What are my thoughts on whatever it is we're talking about? I am booking those completely free. So if you head over to the mailing list, you can get on, and then that link is going to be sent out in a couple of days. My patrons already got it. So if you're a patron, obviously you're in the Discord chat. You're live with me every day anyways. And then you can book those now. They're in the announcement section over on Discord, so you can check that out. Mike Mueller says hi. Chuck says good afternoon. Glad we're all working today. The other thing I wanted to ask you guys, just kind of as a public opinion poll, is what do you guys think is going to happen with the? Oh, where are we going here? What is going to happen with the market this week? Let's get into the screen here, and we'll take a look at kind of what the price action is right now. We're seeing this push up today. If we look on the 1 minute chart, we saw some choppy action this morning, and there's quite a large gap above the current price. We're marking right now S&P 500 marking at 59.21, and we are. Let me make myself a little bigger there so we're not just seeing part of my head. Mike Mueller says Tasty in Canada available tomorrow. Did I read that right? That would be amazing. I didn't think it was going to be that fast. They were looking for a clearinghouse. They did get approved about 5 weeks ago now, but they had lost their clearinghouse. So we'll see what happens. Last time I checked, which was last week, it just said they weren't available in Canada. That would be extremely good timing if they were. Let's just continue chatting about what is going on here. Losing them. I'm pushing the wrong buttons today. Looking at the 30-minute time frame. So this is the S&P 500 on the 30-minute, and you can see we saw this large gap down, and when it gaps, there's no volume. So if we push into this territory, which I expect this gap to close, the point of control over the last couple of weeks is still around this 59.86 level, and obviously a lot of volume right around that 6,000 level as well. But this tiny gap, I expect it to close, and then are we going to see a continued downtrend, or where do we think we're going to go? So I would love for you guys to comment right now here on YouTube, and two things. Do you think the market is going to go up this week? And if so, just say up. And if you have a projection for a price for the S&P 500, I would love for you to just, and this is totally for fun, nobody's holding anybody to it, but what level do you think we're going to close on Friday? So are we going to go up? Are we going to go down? Are we going to go sideways? What kind of position are you guys taking right now? Jackson Tate says, bonjour. I could use a little pullback today. My IWM covered calls are getting creamed. IWM covered calls are fantastic when they go up. I don't know how I have IWM covered calls as well. And I have diagonals, which are poor man's covered calls. And I have some straddle swaps or strangle swaps on as well. But I don't quite understand how is a covered call getting creamed by IWM going up? I mean, isn't that what we want covered calls to do? This brings up a good topic. I am the type of investor that I don't mind putting money into a winning trade. So if I was to look, let's take a look at IWM. Let's just take a look at a position. Let me get an options chain over here and see if we can get something going. Say we're looking at IWM. all this stuff went screaming over to another page here. Let's just get this up here. Let's pull up IWM, which is on this little favorites list. And we should just go over exactly what's going on. The VIX, 1582 up 1.5%, SPX marking at 59.19, SPY 590, NQ trading at 20,000. This is the NASDAQ 20,776, the Russell 2319, and then IWM, which is also the Russell, 230. We've got oil marking at $69 a barrel and gold 26.33 an ounce. Lean hogs $82 a share. Bonds 116. So IWM 230. Let's look at the premiums here because I trade these monthly. So I'm currently in the December 20th contracts. But let's take a look at what strike on a covered call side is a decent return on capital. And when we say decent, like how much do we expect to make on an annualized basis? What if I thought that the market was going to trade sideways or up? Am I okay selling like a 220 covered call when the stock is at 230? Well, generally speaking, yes. You can see there's about 1% on the 30-day time frame for this 220 call. So this position and above, any strike that is above 220 is making around 1% this month. These other transactions, like if we were to be lower than that, they're making a little bit less money, but we're still making a decent return. In order to make 6% a year, we only have to make about $110 for a short put or for a covered call, which are the same scenario. So which level do we need to be at? And that would be 213. So either the 213 short put or the 213 covered call for December 20th. Any strike above that is making more than the banks would typically pay you. So we have a large degree of safety. There's only a 13% chance that we will trade under 213. Now, if this is a position where I thought that the market was going to continue to go up, what I might do is put in a little bit of money. I might say, well, rather than hold this 213, I might decide to buy it out and sell the 215. And what does this cost me? From a cost basis perspective, I'm putting in about $1.70 or so. And so for my $170 investment, I'm getting a $30 return. This is a high return on capital to pay to roll these up. So if we get in a situation where the market has marked considerably higher, and I was completely thinking that we were going to continue to go higher and higher and higher, which I don't really see that. If we look at these daily candles, this is a gap that we saw here. This is the election gap that occurred. And as I was speaking about SPX and like that gap to the upside that needs to be filled, if we look at this chart, this gap has yet to be filled. So I actually am looking at these levels and looking at where IWM, which I'm bullish on and have been all year, I would be riding this lower 50-day moving average. And if I was, then I would be considering like the 222 call or the 222 short put. That would be my entry price for those. And it actually brings up another question, like what is the value? Let's look at IWM. Let's look at this is seeking alpha. So if we look at IWM right now, the quantitative analysis on this is a buy from seeking alpha. So 1 year, it's already gone up 28%. It's a buy rating. The momentum is good. We should see continued upside according to the quantitative analysis. Let's look at one more thing here. I'm just going to flip over to a different screen for 1 second and see what I've got here. I think I have one of these open. I'm going to look at Investing Pro. Now, for those of you who don't know, I am this is new to me. I'm an Investing Pro affiliate. So I have an investingpro.com. So there's investing.com and then Investing Pro membership. And with this really cool thing, if we search for IWM, or not. We're going to have a fail here. Something's going on there. Okay, that's not working for the minute. I was going to see what the fair value was, but that is not loading for the second. So we'll go back to that. But because I don't have that in my mind as to what exactly it is. I don't know why I'm not getting data there. Sometimes my live stream messes with it. Okay, so what does everybody say here? Rox is up. Jackson Tate says, I ladder the covered calls daily. Both are now in the money. In the money really is where you want it to be, but you ladder them daily. Wow. Do the commissions kill you, Jackson? Like, does that, do you feel like IWM commissions are expensive when we're rolling it daily? And then Easy Money says market down for the week. And then I also see Costco is expensive and seems to be getting more expensive. What does Seeking Alpha have to say on Costco? Thank you. Yeah, let's take a look. Pretty cool, right? Like we get to do this together. 60% on the year, and we are looking at the quant rating is a hold, valuation is an F. So it's profitable, which is great. It's still ranked number 3 out of 11 in the industry, but the quant rating is saying, hey, this is, you know, maybe slow down on this. Maybe this this valuation is an F. And I would assume that investing.com is going to agree with us. I'm going to see if let's see if I can get another one of these loaded up in a different window. Maybe that'll work. But for now, what other ones do you want me to look at? What other stocks or what other trades? I would love to have this be interactive today. Let's get lots of. I don't know why this isn't loading. Because of my sign in. Okay, I'll get that working for later. Let me know what other stocks you want me to look up, and we will. NVIDIA's thoughts on today. Jamie says, how would you set up a bearish trade on Palantir? Let's look at Palantir first, and then I'll show you how I would set up a bearish trade. So the valuation is an F. Quant rating is a hold right in the middle. Oh, sorry, you guys can't see that. Valuation's an F. Growth, A+. Profitability, A+. 189% on the year. You know, this is one of those ones that, is it squeezing? Could we see more upside, or is it downside? Really hard to say. Is it easy to set up a bearish trade? Absolutely. So let's look at a couple different scenarios that we might want to play out. I will show you one of my favorite ones right now to kind of, in these low IV environments, using diagonals. Do I have Palantir on here? Don't seem to. Let's add it to the list because it should be in here. So everybody else, are you guys bullish or bearish on Palantir? You know, obviously with the missile attack on Russia today, where you know, these defense correlated stocks could do pretty well. So it's hard to say, you know, whether or not it's a good idea to jump into being bearish on these when things are happening that are not so pleasant in the world. So what I'm trying to do here is look at just going straight bear. Like how much does it cost me to put on? If I put on a $4,000 trade, I've got the profit profile here. We're going to pull it down so we can see it. I'm going to turn this off so you guys can see what's going on. You know, $300 return if the market goes to the downside. This is over the next 17 days, December 6th. So if you're looking for a straight bearish position, that's one way to kind of get long or to get short without really taking a huge amount of risk at the money. So typically when we're looking at these positions, they are, where's that going to jump to? I'm trying to get this in a different spot because I feel like I want to be able to talk to you guys. Painful. When we are Okay, sorry, I was trying to do something. This is a way to get short. And if the market doesn't move, say the stock stays at 61.86, then this actually makes money. 61.86. This has positive decay. So we're in a situation where if it doesn't move down, we make a little bit of money. It can move up slightly before it moves, before it starts to lose money. And if it goes down, it does make money, especially if there's an IV increase. So that's one way to do it. Otherwise, you can do spreads. Let's go over to Options AI and take a look at what they might say about how we might play this with a bearish position using more quantitative analysis, you know. So Palantir, we're gonna look up that. We're gonna go bearish, and you know, what's the time frame? Say we're bearish over the next month, December 20th. What is a potential here? Max risk 410. This is just buying a put for $410. Max gain $5,790. Probability of profit 31 bucks, or sorry, 31%. So if you're just looking for a straight up bearish position, you know, obviously buying a put is a good way to do it. Otherwise, we could look at put spreads. Here's one we have a little bit less risk. This one risks $300, and which is incurred if the stock is trading above $62. What was this put? I don't know why anybody would do that for the extra. Like, why would you do this put spread when you have a max gain of 500 and you have $300 in risk? Like, if you're really bearish on this, buying that put outright makes way more sense than doing this spread, because for the extra $100 in risk, if there is a massive sell-off, like that gain, I mean, is huge. So for another 115 bucks, if I was doing that, that's what I would look at. You know, credit spreads are slightly different to animal. If you're risk adverse and you're looking for these high probability trades but low reward, then this is where you're risking 81 to make 19. But if I really wanted a bearish position, I mean, just buying that put seems like the most likely. Throw 415 bucks at it, and you know, if you can afford to lose the 415, obviously, you can always play it with a stop loss. This is where what I was showing you is that with the complex strategy gives you this downside potential, but doesn't actually lose money at that 62 or 63 level. So if it was to trade dead sideways, instead of it being a full loss of 415, it would actually make 300 bucks. But the overall position sizing is bigger, and there is bigger risk in total if the market was to rally. This is a limited loss when you just buy a put. So you can just do that 415 bucks, and then that's all you get. So when you're comparing these, pretty awesome to just buy the put if you want that downward delta or negative delta in the position. Jackson Tate, commissions are acceptable to me. I run the poor man's covered call with daily laddered covered calls, so there's a sweet spot that was blown through today, but it happens, right? So you're usually selling them slightly out of the money and you're looking for that run up. Yeah, I mean, I'm playing that strangle swap on IWM, so I know exactly what the movement is, and it's been a little more exaggerated than normal. So I totally follow what you're doing. So I'm glad the commissions are tolerable to you. Today, one of my trades was just like, it was way too much money. I rolled some IWM positions. It was like $8 in commissions for 5 contracts that were 5 different strikes, but I didn't think it was going to cost that. It's usually like $2, and instead it was 8. So NVIDIA, NVIDIA is up today. You know, I think I'd still be slightly long NVIDIA. Let's take a look at what the expected move is here on Options AI, because it's interesting to look at it from a perspective of, you know, where are we potentially going. The option pricing is between 134 and 156. We're kind of in this range. If we look at it with a chart that actually has moving averages on it, it might give us a slightly different story. We can kind of look at where we are. NVIDIA has obviously been on a very bullish run. When we're kind of chopping around this 20-day moving average right now, we did break below it, but we did not get to the 50-day moving average. This could break up or down either way. With this type of trade, what I like to do is set up like diagonals, and I kind of play them I either play butterflies, which are limited loss, or I play diagonals, which have a consistent decay to them. So if I wanted to do like NVIDIA, maybe what I would do is I would sell like the 60 delta 143 call 30 days out, and then I would go out to May, and what I can do is I could buy and depending on how aggressive I might want to be, I can buy like an 80 delta. What this does, it gives me net positive delta, and if we look at the profit profile on something like this, we would see that this is a trade that makes money if the stock stays kind of where it is. So if the stock stays at 145, then we make $500. It's relatively neutral in that it's got very small positive delta. There's no risk to the upside. So if NVIDIA was to move up, our gains are obviously smaller, but these are the type of trades that I quite like. The 143 strike is just slightly below where we're currently trading. So if we get that little down tick, we actually are spiking up into a profit tent. Break even is down around that 135 level. So that's kind of how I like to play. If I didn't have a position at all in NVIDIA, that's what I would look for. Otherwise, if we want to play like neutral positions, we can look for iron condors. If we play these out December 20th, layering these on, max risk $315, max gain 185. So we'd be selling the 162, 162.50, and selling the 129, and then buying the 167 and the 124. 72% probability to profit. Very, very simple setup. So there's that kind of thing. One of the things, like if I wanted to get directional, I talk about butterflies and how I might sell them. I don't typically do butterflies like this. Like if I wanted a long position in NVIDIA, what I would do is I would adjust my butterfly over so that I have risk to one side and no risk to the other. So now I've got a risk of $1,000 to the downside if NVIDIA trades at 128, and I've got a max gain of 138. Very, very simple setup. And I like to do these butterflies like this because it's cheap to get in, like the 128 put, risking $1,000. I have the potential of making more than 100%. I have the potential of making up to 130% of what I've risked. So we can do this with condors as well. And you guys have watched me do videos on this where what I do is I take one leg and I can adjust this so that I end up effectively getting a nice a nice profit zone that's really wide. Like look at where this profit zone is. If NVIDIA trades for the next month above 144 and below 162, then I make $712. My max risk is if NVIDIA trades as low as 124, and that's a 1292. Options AI is a pretty cool software. I do have a link again in my description. I've got links for all of the discounts you guys get. If you're watching this, if you're watching my stream, there's discounts for everything. If you don't see it, then just ask me, because some of these services are really inexpensive. Like Options AI is not very expensive to sign up for, and it's pretty simplistic to use. I know there's different softwares out there that are more aggressive and give you more options, but I mean, for most types of trading, what we're doing is we're looking at the assumption and saying, hey, I want to make some money. I think NVIDIA is going to go up, or I think it's going to go down. And it's so simple to do this. Like, look at what I can do with, like, let's say I think that NVIDIA is going to go down. Oops, didn't mean to do that. I grabbed too many, but you can just grab per handle here. And what if I thought NVIDIA was going to go down? Well, this is like a little bearish condor. And so again, max risk, $1,000 if NVIDIA trades above 167. Max gain is 450, which is about 45% return on risk capital. It's got a 62% probability of profit. Completely makes money if NVIDIA sells off to the downside. So if you're worried about market crash and you think, oh, it's not going to go up here, even though the market is pricing in this move, that's what the pricing is. These types of trades, condors, butterflies, limited loss trades, can be very, very lucrative. And just, the market can just tick along in here. you know, and make a 45% return. The risk, of course, is that I lose all of the money. So we have to play small and layer on more and more positions based on where we are. But what we might want to do is put these in at an interval. So you can kind of layer the trades on, which is typically what I do. I have trades that I am kind of looking at the underlyings, and I'm constantly putting trades on and off to kind of optimize where I'm looking for the particular moves. Thoughts on UNH, PANW, crowd, many thanks, easy money, absolutely. Let's just take a look at those. I'm going to pull them up in the expected moves because I think that gives us more context. So Palo Alto Networks, obviously, here's the expected move for the next month. And again, we've got, it looks like we have earnings coming up, something happening here. I'm going to click on the earnings tab. Yeah, so we've got Wednesday, November 20th, we've got earnings coming up. So that's something to watch out for. This is going to be an earnings trade if you put that on, because obviously that is 2 days from, or tomorrow rather. So we've got, and there's the expected move, 358 to 416. These can be a little bit less fun to play for earnings. Here's a max gain $104, max risk $146. So about a 30, what does that work out to? 60% return on capital, 76% probability of profit to play this little butterfly, the short 417 and the short 357 with the longs at 420 and the long at 355. So very, very simple trade. And again, if there was an inkling to say, well, I'm bullish, then just take the risk off on one side. Very easy. So max, by being a little more aggressive with one of the strikes, widening this out, still a 71% probability of profit, no upside risk, max risk to the downside, $700, max gain, still a 50% return on capital, and a massively wide zone between 417 and 365. So I like to play my earnings trades directionally. That's just how I do it. But, and again, using condors, I think, are very simple ways to do that. So again, max gain 297, 67% probability of profit, max risk 703. This would be, you know, your max profit zone higher than recent. Let's look at PANW's bigger chart here and just see where it's been. I don't actually trade this. So we have seen this as high as 415. We are coming down, definitely, you know, on that. If we were to draw some channels on here for the short duration or for the short time frame, that's what we're looking at. But longer time frame, definitely trading in a channel here. We're gonna break down, we're gonna break up. Hard to say. Hard to say. And then crowd, let's look at crowd. It's the same thing. We'll do the same thing over there. Pretty fun. I love options AI. What a simple little platform to just access and say, well, where, you know, how quickly can we put on a trade? And when are earnings here? Did we already have earnings? I don't see any big blip in there. Tuesday, 11/26. So we do have earnings coming up. There's small expected move here and then earnings next week. So I would probably play this as an earnings play if there is earnings like that. So go like November 29th and then see how much money I can make as an earnings trade. And again, if I wanted to be bearish, I would just build that condor. Bullish, I would build the condor so that I have no risk to one side or the other. I don't like to place completely neutral but usually you can make more money. That's the reason. Like the max gain $317, risking 683. So if we were to look at what it pulled up, I mean, the max gain on this 114. I'm risking very little. So in order to make that 315, I have to just up the number of contracts. But you know, there's risk to both sides, and oftentimes we get blown out one side or the other. So I typically stack my risk on one side to try to get that increased potential. And usually you have some sort of directional assumption. You're like, I think this is going to go up or I think it's going to go down. Thanks for all the likes, guys. I've got 5 likes. That's fantastic. I'm glad to see a couple people on. Palantir to the moon could be easily, it could just go. Nathan Peterson, bearish, short-term, long-term, definitely bullish. Which one are we talking about? And Chuck says he's bullish. Nathan, are you bearish? You're bearish on SPX this week. I mean, I think, I feel like SPX is setting, let's look at SPX on a longer time frame and like on a weekly. Let's look at SPX. So we are, if we're looking at this is the one minute, let's look at 1 week. 1 week. This is a crazy chart. I mean, when we look at the 1 week, I cannot see that we'll continue in the trajectory that we are with the current market situation. What what is it that what's going on in the world that's causing this kind of market bullishness? So in the longer time frame, when I look at this, I think that we are due for a correction of some sort, and I think that just in regular market sentiment, I think we're due for a correction. How big? I mean, anybody's guess. Are we looking for a 20% pullback, potentially 10%, but something from these levels? Like this is getting into like the crazy making zone where we're touching down here the 5,300 and sitting up at 5,900 level, 6,000. We're hitting that ceiling, and just the shape of this curve, the further back we go, we're due. This is reminding me quite a bit of the end of 2022, rather. 2020. Why is this? Let's look at 2021. When we moved into the end of 2021, we had this bullish move, and then we just started to see some bearish momentum. And it wasn't crazy. I mean, it sold down for like 9 months. It's typical. We hit our low in October. It was kind of what we expected. Are we going to see the same sort of thing? Like this is kind of what this year feels like. We've had a 2023 run. We didn't quite make it to those 2021 levels. Then we've got the 2023, 2024 run. And where do these corrections come? And when they have appeared recently, and as usual, they're pretty quick. So we have to be aware. We have to be aware of what's going on. So make sure that we're playing with limited losses, and we don't have put ourselves in a situation where we could be really dire straits. And here's a good, as we're speaking about this is the 1 minute chart, and you can see what's happening today. So just in a daily time, a minute by minute time frame, we see moving up, and then I started this stream right at 11. We're talking about how high this was. SPX was at 59.21, and then we start to see this downward pressure, and here it goes. So we didn't quite get to that point where we're filling that gap. This gap being above us, and we can see it there. Like there it is. There's the gap. If you guys are, I'm not saying it has to be filled. I'm just saying that if we push into it, when it's like this, it's pretty easy for the market to move quickly through these zones because there wasn't a lot of prior trading. So they can move quickly up or down. We have a gap below as well. So, and this is again from if we zoom in on this, not on the weekly, but on the daily chart, if we look at the 1 day chart, you'll see that there's a gap below us that we haven't filled yet either. So this will be another quick move. This 57.89 level, 58.64, and we're playing with it. We're testing it right there. We're looking. We're like, are we going to break below? Because if we break below, this again should easily be filled. If we look at that volume weighted point of control, or the VWAP, the averages here are way low. Like it's crazy. 50, 53, 59 this level. So that is 500 points. And can we see the S&P 500 move 500 points in a day? Yes, we can. It is possible for it to move all the way down. So we could be setting ourselves up for a very rapid move. Does that happen typically? Not at the end of the year. You know, we usually get this Santa Claus rally, which becomes self-fulfilling. So I would guess we're going to see some chop, but at some point, I would expect that we're going to see a drawdown. That's just my thoughts. My thoughts on what we're looking at. Mike Mueller says, I know I'm missing out on some things, but I only play the indexes these days. Individual companies are too volatile, and exec sneezes and stock can plummet. You are not kidding, Mike. It is I am moving more and more into these positions where I have, like playing IWM, playing the S&P 500 with limited loss. I think that's the key here, because if we do see large moves, I don't want to get my account handed to me. That's really the concern. What if there was a 20% drawdown over the course of a month? Can we keep up with that? I don't mind rolling out positions that are making 6 or 7% annually if I think we're going to see any sort of retraction. And if the market continues to go higher, I can decide to put to place some money into those. But for the most part, I'm playing in a way that has limited losses directly below where we're playing, with just slightly bullish momentum at this point in time. Jazz Singh says, what about assignment risk? Assignment risk on in the money covered calls is a really great question. I think people worry quite a bit about assignment risk. I was assigned like 500 shares of IWM just this week on short puts. It happens. It's like, we saw a little bit of a drawdown. I've got some diagonal trades, and do we get assigned occasionally? Yes. What happens if we get assigned? Well, really what's happening is we can just get out of those positions. Assignment, all it means is we bought some shares. All I have to do is sell the shares. Now I'm back to current position, the previous position, and then I have to replace whatever contract I had. It really doesn't cost very much money. It becomes more about extrinsic value than anything. I'm trying to load up a chart here so we can look at an actual extrinsic value calculation. So let's just look at 238. Let's say we had sold a short put at 238. Now this is, somebody might say, well, this is December 20th, it's 30 days out, there's risk of assignment. Somebody's going to make me buy my shares or buy these shares for 238. Remember, when we exercise, we give up the extrinsic value. So any exercising that happens, if we were to look at the current price of this, if I was long this position, let's just say the market maker was long, they could get $1,050 for this position. If they made me buy my shares, if they gave up this contract and they forced me to buy the shares, I would be buying them for 238, and they're currently valued at 229.82. So we just have to get out our calculator and do that math and see how much money there is. And where's my calculator? Looking all over the place. Oh, there it is. Here's my calculator. We're going to take a look at that. So we're at, say I pay a debit of 238. We're just doing the difference, and then minus 229.88. 229.85 right now. And it's $815. So they would be making $815, but they would be giving up a product that's currently worth $1,050. So there's $200 they're giving up. It makes no sense for them to exercise that. So there's zero risk of this being exercised. In fact, if it did get exercised, it's a benefit to you. You've actually made money. You've made $200. So where the value comes, let's look at a call example, and we'll look at something that's a shorter time frame. So if we were to look at something expiring tomorrow, say I have the November 20th, well, and my covered call's the 232. Am I going to get assigned the 232? Are they going to buy my shares? Let me clear all this off. If I was long stock and short the covered call, if I held the 232, would they buy my shares for $232 when they could buy them for $229.87? Answer is no. Nobody's going to do that. So there's no risk to assignment. Let's look at the 229s. If somebody owned this long contract, would they buy my shares for $229 when they could buy them for $229.88 and sell this worth $1.50? So let's see how much math or how much money they would make. Let's say they bought shares for $229.87 if they really wanted shares, and then so that's a debit, and then they sold their long call, which is worth $155. So if they do that plus $155, they are paying a total debit of, or sorry, I'm getting a credit. They're paying me $228.32. I'm getting paid $228.32. There is no risk. Okay, somehow I'm confusing myself here. What's happening? They are selling my shares. So I'm selling my shares. I would be getting $229, and they could sell this option for $155 and buy the shares for $229. So it would be cheaper for them to do this, to not assign the contract, than the $229 that they would be paying to purchase the shares. So when that differential, when it's less to sell the option and buy the shares, then your option is not at risk of assignment. If we did this math on something lower, like take this off, 225, let's do the math on this. This would be minus 225, and then plus the value that they're receiving to sell, 490. You're going to see this is going to be very, very close to the price. I'm doing something wrong here. 225 plus 488. 229.88. So now we're like an 8 cents differential. When this differential is in that range, that 5 to 8 cents, there's assignment risk. So because the price of the combined 225 plus the price of the option is very, very close to the stock price. Really what we do is we look at out of the money options. This is the simple way. You know, I'm trying to show you that math and it's just confusing. Just look at the value here. If the value of the short put at those levels is under 10 cents, there's assignment risk. Or if there was an option, or not an option, a dividend being paid. Say they were paying like a 80-cent dividend. Usually this is priced into the call already. So you do have to do it when there's a dividend. You have to look at the price of the option. But extrinsic value, just look at the out of the money. If we go out to November 21st, if we look today, if I had the 225, I would have assignment risk. Well, if I go out to the 21st of November, I no longer have assignment risk because I have 17 cents of extrinsic value. And the further I go out, now if I look at November 26th, this has been really slow today, but you'll see there's more extrinsic value. Just keep looking at where we are on the screen. So that 222 has 43 cents of extrinsic value. There's no way you're getting assigned. You know, how far does it have to go? Well, it has to go where these have less than 10 cents. So the 216, November 26, 216 would be at risk. Or from the put side, if we held the 240 short put or below, those would be at risk. So anything in this zone, those are at assignment risk. If you're holding the 240 in December, it's not going to be at risk. Does that make sense? I hope that does. See, the 240 has $2. Nobody's giving up $2. Nobody's giving up $2 to assign the short put at 240. It just doesn't make math sense. UNH, I didn't look at UNH. Let's look at the expected move on UNH. Well, I'll let you look at that. And big moves there. What else? Curious their thoughts on OKTA potentially recovering from a bit into earnings in 2 weeks. My thought on OKTA is that I'm still bullish. I do have a position on it, Nathan. I have been bullish for a while, and I'm doing it with a call zebra. So I have kind of a big valley of death to the downside, which I don't love. I think that the overall OKTA, I'm long-term bullish, but at this point in time, I don't know what's going to happen. You know, nobody does, of course. But here we go. Here's $74. It often has been trading above this 77 level, so that is where I'm looking at it. Let's pull it up on here so we can look at an actual chart. I don't have it on my list for some reason. Nobody asks about it during live stream. Thanks for asking. But yeah, I do have an OKTA position, and it is long bullish. It's gonna be slow. Let's go over to quant ratings, a hold right now. 1 year chart 3%. So we're at basically at the same level we were at last year. But it's profitable. It's just momentum is poor. So it's 11 out of 3. Up a bit today. I'd like to see return to those levels. I'm not holding my breath. Playing stuff that is not killing me if it doesn't go up. Nathan says, oh, that comment was for me when we were discussing Palantir. Yes, probably. I'm sometimes slow with my comments. This is like not a super busy chat. So if I blast through too much stuff too quickly, then I'm just asking you guys for too much input. Jody P, is there a different promo code for options AI? It says the code is invalid. The all caps drawbridge? That's no good. I will reach out to them and find out what's going on, because that's no good if I'm promoting something for them and they're not giving you a discount. So thanks for checking it out. But I will yeah, all caps drawbridge. That's what it should be. But I'll reach out to them and find out what's going on. Vince, the IV premium and out of the money options in MicroStrategy is massive. How do you estimate the risk of this trade? Buy 10 call spreads, the 700, 710, and sell the 760 call for a credit of $17, 27th of December. So how do we estimate the risk? Well, what we do is we look at the delta. So if we were to pull up MicroStrategy, which is on my list here, or not, maybe it's not on my list. So deltas will tell us the percentage probability of it reaching that level. Let's go to MicroStrategy here. So the question specifically is how do we look at the risk? We're buying 10 call spreads, the 700, 710, which are bullish positions. 700 for what are we talking about? MSTR? Those numbers seem wrong. Are they? Do you mean 410? I mean, because if we're looking at 710 and 760, I don't know how much, let me just see how much the call is. December 20th, long call. $760. Boy, that's a big move. So the max risk is 2,500. Wow, there's that much premium in there. Okay, so if we were to sell that call, which won't let me do this here on Options AI. Let me look at, so we know it's $2,500. And then if we were to do a bullish trade and we were going to do a call spread, and we'll look at the probability. it's not even letting me go that far. That's because, so 710. What I'm trying to do here is get a percentage for us. So if we were to do this, the risk is $100 and, or sorry, the max risk is $100. It's got a 26% probability of profit. That's wild. So that's 26 delta. That is a huge move. So in this case, what would happen is you would be buying 10 of these. Your max gain would be 80. You know what? This is a time for the Rourke. This is a time for the Rourke. Now that we know percentage, we'll pull it up. I don't usually show the Rourke too much on these live streams on Tuesdays. It is always included in my Thursday streams, but let's I wasn't prepared for this, but we'll pull it up here. Where's my chart? What is going on? Got too many windows open here. Just bear with me for 1 second. I'll get this going here for us because I don't know where mine's gone, but that's fine. We'll load it up here and we'll take a look. This is my proprietary spreadsheet that I built and have been working on. It's not that it's a work in progress. It's definitely a position that a spreadsheet that is very usable. So we're going to go into a custom sheet and we're going to take a look at this. So this is how we look at this is what the Rourke looks like. And we're just going to see, so this is my rolling options record keeper. What it does is it allows us to build whatever we want. So I'm going to make a duplicate of this tab, which is the zero trade custom. We can build out whatever custom trade we want. In this case, what we're going to do is we're going to type in MSTR. And I'm going to call this test because this is in my live group where we've got an underlying that's going to pull up and transaction date is today. The underlying price of MSTR right now is going to load for me. It is 427.51. So 427.51. I was just trying to beat this. You can see it pulls the live data right up here. In the current share price gets pulled from Yahoo Finance. That's part of the programming. Strategy description. We're going to say bull call spreads and short call. And then the option expiration date is going to be 12/27, and then we're going to just basically put in what we want to do. So we want to do some long calls, some short calls, and then a short call, and it will chart this out for us. So we wanted to do the 700 long, 710 short. We're buying those. We're buying 10 and 10, and we're selling one of the 7. What is it that we're selling? The 760, is that right? 760. I'm glad you asked this question. I love when people ask like really specific questions. This is fantastic. So we're doing one of those, and the total credit is going to be 17. So we're going to type that in here, and why did that enter? What did I do? So it's going to show us a profit loss calculation. The chart looks a little flat right now, just showing $1,700 across the board. It's because of the range. So the range gets adjusted here and sell D63. And I'm just going to widen this out to like $10. We'll see if that's wide enough. Not quite. So we'll go 15. So basically what this looks like is a big profit 10 to one side. I mean, obviously your profitable zone, your break even is around 877. So the stock would have to double in price. If it was to capture up into this zone between 712 and between 710 and 760, the trade would close for $11,700. I don't know what the margin requirement is on this, but that's what it charts like. Now, the risk really on this is, well, what is the break even? The break even, now that we can look at the chart, we're looking at the 877. So the question becomes, what is the percentage likelihood of us going to that price? And let me just see if we can pull that up here with a call, and we go December, we'll go to 877. Can't even go that high, but now we have to look at a chain. Why these are being so slow to load. Let's go to Yahoo Finance for a second. I'll just load that up and we'll take a look, because that'll pull the chain right away. Just bear with me for 1 second. Pull up Yahoo Finance. I know you can't see it yet. We're going to go for a MicroStrategy, and I still know you can't see it, but we're going to get there. Okay. They've moved this around on me recently. I used to use Yahoo Finance all the time. So November, we're going to go to, are we not going to? What's going on? Slowly dying. I just want to be able to show you guys. I just want to know what the delta is, but I can't even find that. So why are we in list mode here? Let's go to, maybe we have to change this. No, none of the pull downs are working. I don't know what's going on. That's useless. Okay, so if anybody could tell me what the delta is of the 875, that's really what we want to know. Whatever the delta is. If it's like 0.02, then there's a 2% chance that the market's going to go to 877. That is the break even, so that's where the risk is. From a percentage standpoint, what's the percentage likelihood? It's going to be whatever the delta is of the 875 put or call. Doesn't matter which one. Just look at the 875, 870, somewhere around there. That's going to give you a general idea of what the chance of making that is. Crazy that there's that much premium. Cool trade. I like it. I you know, pretty big for some people. I mean, $800 stocks, they have that potential of having unlimited risk with a short call. So maybe not the smartest idea to be playing that type of trade for small accounts, because the swings can be huge. But wow, what a cool setup. So thank you for sharing that. I really appreciate it. And Nathan says you can switch to the classic layout. Yeah, well, I wish that's like, can I, the bottom? Frustrating. I just don't like to do that stuff live. Okay, we are at 11:59. It has been fantastic. Hopefully we got some information out to you guys that you were excited about. Thank you for the very specific trades. I like that when you guys are looking at the specific trades. And Vince, good luck with that trade. I mean, that looks pretty amazing. We will see what happens with earnings. Obviously, MicroStrategy has the potential of going up if Bitcoin prices really continue to rise. And Richard says, watching from Louisiana, Yahoo's having issues. Thanks, Mike. So it's not just me. Appreciate it. Bottom right, first thing I do these days. That's so funny, isn't it? It's like they upgrade these things and you're looking at it going, really? Speaking of which, I've been playing with IBKR desktop because somebody's been, there's been multiple people asking in my local trading group, which meets tomorrow night. If you guys are local, if you're in Kelowna, or if you're in the Okanagan, come and chat with us live. It's always a fun time. We drink some beer. We're going to a great little pizza place tomorrow, so I'm super excited about that. Today we're doing pizza too. I'm doing deep dish pizza at one of my other trading friends' houses, so that's going to be exciting. But Jamie says there's no option at that level. It tops out at 760. Really interesting. So it doesn't even show. So you're really at the very, very top. So you can't do a spread. I'd be interested in taking that trade if there was a spread, but then you could then you have some sort of limited loss in there. But I mean, I can't imagine that the stock is going to double, but crazier things have happened. Maybe it does. Maybe it doubles. Wild. Yeah, you guys are amazing. Thanks so much. Let's get rich together. I'll see my patrons on Thursday, and I'll be in the chat room. We'll see everybody else next Tuesday. Thank you so much. Take care. Bye.